Hey, everybody. It's your boy, Sean McLaughlin, at Options Sean on the old Twitter X. Today is March 20, 2025, and today might be the first day since Friday that I'm starting to feel normal. For those of you hanging out in the chat room, you know I've been sick all week, been yo-yoing between a 101 and a 104 temperature all week. Went to the doctors, did some tests. None of the tests were conclusive. I didn't have any of the common things. I didn't have COVID, RSV, the flu, none of that stuff. Nobody really had any answers other than just wait it out. You'll be fine. And well, maybe they're right. I'm starting to feel like my old self today, finally, which is good. But hey, you're not here to talk health. We're here to talk markets. We do have some things to talk about. But before we get into that, of course, let's drop the old disclaimer that everything we discuss here is for educational purposes only. I'm showing you what I'm doing with my money, and I'm hoping that you guys are, learning something from seeing me follow my process. All right, so let's talk high level here. Let's talk about the SPY. The SPY has been in my mind lately. And for some reason, this chart is showing a bad tick. Maybe let's pull up the Qs. Maybe this will be better. Okay, Qs is better. Um, I made a lot of noise yesterday. Me and JC and the guys did a live stream following the Fed talk yesterday, and I made a lot of noise about how I wasn't convinced that we've seen the lows in the stock market. I'm not calling for a crash by any means. I'm not calling for another 20% down from here, although certainly anything's possible. But I did not feel that these lows that we've put in. Um, on the Qs here, looks like March 13th. I wasn't, and I'm still not completely convinced that that is the low. And the big reason I was saying that is I wonder if I could pull this up here real quick. I think I can. Uh, Look at this. We're doing some live updating to my charts. Here we go. So I just added volume to my charts. The thing that when you're looking for markets to bottom, whether it's the S&P, whether it's the Nasdaq, what you like to see is a big washout volume day, which, arguably we got that on March 10th, right? I mean, look at the volume here on a red day, the highest volume we had, second or third highest volume day all year, right? And the market felt like maybe it put it a little low, but then we undercut it again, barely on the 13th. But bulls will point to this little washout here as being a big, that's it. That's the bottom. But what's been missing so far since then is we've not had what's called a follow through day. Now, I am not going to sit here and proclaim to be the grand expert in volume analysis and anything William O'Neill like, but classic William O'Neill charting will tell you that once a bottom has identified itself, or potential bottom has identified itself, then within anytime within the next 3 to 7 trading days or 3 to 10 trading days, you want to see a follow through day with explosive volume. So you want to see an up day where the volume was significantly higher than the previous day. Well, we just haven't had that. If we zoom in on my chart here a little bit, I mean, you can see at the bottom here, the green on the low end here, that's the volume, but the green correspond with green days in the market. And you can see every green day has been met with lower and lower volume. Now, yesterday, we finally had an uptick, right? Like that day, yesterday, the volume was finally higher than the previous day on an up day. But was it that much higher? It wasn't that much higher. I don't know. So I'm not convinced yet. I'm not convinced. That might have been the bottom right there on March 10th. And if so, great. Let's move forward. Let's go. But I'm waiting for that day. I'm waiting for that day where just everything rips and volume is robust. That will convince me that, all right, now we could start focusing on, getting a little bit more aggressive on the long side. All right. So that's my high level. Just real quick, we'll look at the VIX. Let me pull it up here. Look at the VIX. VIX is back below 20. Now, here's the thing about VIX, worth noting. Some of you, or some people, let's say, amateur chartists might look at this and go, oh, VIX is selling off. Okay, it's over. The worst is over, right? Yes, maybe, relatively speaking, compared to where it was 2 weeks ago, right? But a VIX at a 19, almost 20 is still an elevated level, right? I mean, traditionally, these numbers may have changed over the years, but traditionally, when viewing VIX, 12 is kind of the floor when, things are great and there's nobody's worried and we have a comfortable bull market going along. The VIX will kind of bottom out around 12. And then 20 is traditionally kind of like that's the upper bounds. Like if we get to 20, that's where things are getting dicey. People are getting nervous. So yeah, we're well off the highs of near 30 that we had just a short while ago. But being at 20 is still not, that's not an all clear signal to me. All right. I'd like to see VIX get back, below 17, below 16, before we can start, confidently say, all right, the coast is clear. Bull market, let's go. But just anecdotal, just things I'm seeing. By the way, guys, I do have the chat open there in the YouTube channel. So if you do have any questions, I'll try to answer it if I see it in time. I see you, Dan. Glad you're here. All right, so let's talk about some positions that have exited since we last spoke. You're going to find a common thread in all three of these positions that we exited. Well, two common threads. The first common thread is they're all winners. How great is that? Man, it's been a rough couple of months, right? With a lot of the trades that we do here at All Star Options, being the swing traders that we are, this correction in the bear market did not, it took away a lot of our open profits we had in some positions that had been doing really well for us. So it's nice to have three winning trades hit the tape for us this week. So that's one common thread. The next common thread is they're all similar type trades. They were all bull call spread. I'm sorry, bull put spreads, meaning we were taking advantage of the elevated volatility of a couple of weeks ago and declaring, or at least what we thought with these stocks, that these stocks were probably at or close their low points and were due for a turn. And with elevated volatility, being present, that created a great opportunity for us to sell put spreads, buying back later at cheaper prices when either A, the direction goes our way, or B, volatility comes in. In both cases, or in these cases with these stocks, we got both, right? We got the direction going our way and the volatility came in. So in no particular order here, let's talk about GE. GE was a bull call spread with April options where we sold the 195 puts and bought the 185 puts. We paid 270, or we collected 270 for it. And we actually took a little heat on this trade. We got into this trade, I believe, on March 7th, and or maybe it was March 6th. Either way, we took a little heat on the trade, but we stuck to the plan, and we never violated our stop loss level, which was right here at 185. Never got there. And we were rewarded for our patience. Even though it traded intraday several days below this rising 50 period moving average, look how well it kind of rode that 50 period moving average, right? I mean, it did what it's supposed to do, and it stuck in, and we were able to close this trade on the 14th. What was that? Was that Tuesday? We were able to close that trade for half of what we collected on day one. We collected 270. We closed it at $1.35, exactly according to plan. I don't like to get cute with these trades. I'm looking for a quick hit and run. And whenever I can capture 50% of the premium that I collected on day one, that's good for me. I'm not being greedy. All right. Especially in the tape we've been in, right? So GE, we're out. Similar story with CME. The crazy thing about this one is that this was essentially 1 day trade for us. We did a bull call spread selling the April 250 calls. We entered this trade on Friday, right here, right? Was it Friday or Thursday? Yeah. Sorry, it was right here, March 14th, Friday. We entered this day. And over the weekend, I mean, the weekend are the calendar days, but literally the next trading day, Monday, the 17th, we closed it. We had our profit target in 1 day, one trading day. So we sold it for $1.70, bought it back for 85. I mean, sometimes it's better to be lucky than good, right? But CME worked for us really well, worked for us quicker than I expected. I'm very happy about that. But we're out for 85 cent debit, booking the 85 cent net profit. Easy peasy, lemon squeezy. All right, last up, TJTX. This was a bull put spread as well. Now we entered this trade for maybe different reasons than the GE trade. We weren't like really catching a turn. This stock was actually demonstrating strength. And the reason why I chose a bull put spread in this one at that time was because the options were really priced, really high priced. The premiums are really high, and I just thought, I could buy calls, but I'd really be paying through the nose for it. And I'm not so sure this thing's going to go that much higher in this tape, in this environment. So I really just needed TGTX to not, roll over and die on me, which as you can see, it did not. We actually got out of this one this morning. So we put this trade on the 10th, March 10th, I believe, or March 11th. We collected $1.40 for it. And we got out this morning, it's 70 cents. And by the way, all these exits, these were limit orders, good till cancel limit orders that I had resting in the market. I put those orders in on day one when I got into the trade, and then I forgot about them. They all got filled on their own today. I didn't have to do anything about it. I just heard little bells ding go off on my computer, letting me know that I got out of the trade. So, hey, it's been a rough couple of months, certainly recently. It's nice to have three trades hit some quick profit targets for us, keeping us in the game, keeping us motivated, keeping us feeling like we got a fighting chance, right? That's the beauty about options trading, right? We have different strategies and different tactics we can employ at different times to take advantage of certain market environments. Now, our bull put spread's going to continue working going forward. I don't know. Maybe not. I feel like there's still some good opportunities here when we can find them. I'll be looking for them, but we'll see. We'll see what the market has in store for us. All right, let's update some stops. This will be quick. I only have one updated stop to talk to you about, and this is AEM. And this is a trade that's a little challenging for us. This may be one of those trades where we had the right idea, but the wrong execution or wrong strategy. It started out as a call diagonal spread that we got in back in late January. I mean, the stock is trading beautifully, but we've been having to roll our short calls. Thankfully, we've been able to do it for a credit. If we get back above 107.50, we're going to have to do another roll again, rolling our August 105 calls up to the 110 strike in a further distant option. We'll see. We'll see. But I am raising my stop. I'm raising my stop here to 91. I don't want to see AEM roll over and close below 91. As if it does, I think that is kind of lights out for this trend that we're riding. But depending on how things shake out and when and how that happens, we might get stopped out and below 91, and it might actually end up being a profitable trade for us. Right now, our net risk, if AEM were to completely collapse and go to zero right now, our net risk is only 45 cents. It started out as $1.40 on day one, but because of two defensive rolls we've made, now we only have 45 cents cash outlay at risk right now. So if AEM were to crash on us, that's our worst case. I don't think that's going to happen. But if we come back below 91, what will happen is that these August 105 calls that were short are going to lose value theoretically faster than the January 120 calls that we have in this trade. So we may be able to actually exit that trade for a credit. We'll see. We'll see. That's the thing about call diagonals. They're a little tricky like that. Sometimes they work great for us, sometimes not. We'll find out. But that's the only stop I'm updating right now. 91. If we get below 91, I'm looking to get out of this trend because I think the trend is over. All right. Lastly, I will review the new trades that we've put on since we last spoke. I think I'm missing one here. Let me look at my spreadsheet here. One sec. Oh yeah, we need to have oh yeah, I know why, because one of them opened and closed already, the CME. We already talked about CME, right? We put this trade on Friday last week, but we already got out the next day, Monday. So that's why this is not here anymore. So it's already been closed. So CME was one of our new trades, but we've already talked about that. Another new trade that we put on recently is Hyatt. This is a bearish trade. I don't have the details here up on the chart for you. If you want the details for these trades, you could always find them at allstarcharts.com. Head to the options section, or head to the members section, head to the options section, and you will find detailed trade plans for this and every trade we've put on. And guys, if you've never seen one of these trade plans, what I do is I talk about the opportunity. What's the setup that we see that we like? What's the option strategy I'm going to use to employ my thesis or to make my thesis? Um, where I'm managing risk, how I may be sizing my position, where I will exit the trade, and where I may or may not take profits, and where I may make adjustments along the way. Whatever details are pertinent to that trade, they're going to be in that blog post so that you could read that blog post and you'll have it, and then it's yours to manage the rest of the way. You'll have everything you need to manage the trade. That's the good thing about planning ahead, right? We want to have plans ahead of time, which, by the way, in a fast market when things are getting wild, it's good to always have those blog posts to go back to. I do it. I mean, even though they're my trades, I go back to my own blog posts all the time and remind myself, okay, what was I going to do if X, Y, or Z happened? And I go there, I'm like, oh, yeah, that's it. And then great. I don't have to think about it. I just go do it, right? That's what's great about planning ahead of time. And I hope that's something that you do or think about doing or should start implementing in your trading is take a minute, take 5 minutes to write out a plan before you put the trade on so that you know what to do if the unexpected happens. I'm telling you, it's a game changer for you. It's been a game changer for me. All right, everybody. Let's just go here real quick. I always drop this. It's just one, but the updated stops slide. We just have one. Take a screenshot if you need to. As always, everything we discuss here, if you have any questions about anything I discuss, shoot me an email at info@allstarcharts.com. If you want to get involved in All Star Options and get these detailed trade plans sent direct to your inbox, and if you want to get involved in our live 24/7 chat room, where you can interact with me and other members of our community, get involved. Go to that link, stockmarkettv.com, get All Star Options. That's also in the YouTube chat. You can see it there. You can click in there. We'd love to have you involved. And of course, TrendSpider, my friends at TrendSpider, let me use their charts. Those are the charts you see here in these presentations. If you like those and want to use them on your own, head to trendspider.com and use my promo code Sean50 for 50% off a subscription. Again, their link is in the chat as well. So you just go ahead and click that. All right, everybody, that's all I got for you. Have a great weekend. Again, I'm finally starting to feel healthy. I think everything's on the mend. I'm pretty excited. Can you tell? I'm pretty excited about this. But have a great weekend, everybody. We'll be back next week. Until then, trade them well and be well. All right, take care.